So friends, there's about 2.5 million mortgages that are in forbearance program right now due to COVID-19, which ultimately means that 2.5 million homeowners are not paying their mortgage payments due to the COVID-19 pandemic. Now, whether all 2.5 million people are in a hardship or they just took the forbearance program because it's available, we don't know. But what we do know is that there are several options as far as exiting out of the mortgage forbearance program safely. And yes, there is a way of exiting safely and not so safe, and you don't want to get screwed by the bank. So let me go and break down exactly what your options are. If you are in a mortgage forbearance program right now, I'll go and break down what options you have. Now, if you're not in a mortgage forbearance program, but you know someone like a friend, family, or someone around you that is in a mortgage forbearance program, do share this video with them, as I would love to help as many people as possible when it comes to exiting out of the mortgage forbearance program. Hey, what's going on, everybody? This is Sam Kwok here, one of the Kwok brothers. And just as I mentioned, 2.5 million homeowners are currently in a mortgage forbearance program as of February. Now, last week, I made a video explaining how the Consumer Financial Protection Bureau, CFPB, is kind of freaking out about what could possibly happen in September when millions of homeowners exit out of the forbearance program. And really, the concern is that the mortgage companies aren't really going to do much to help them exit out of it safely and to ultimately avoid a wave of foreclosures that could possibly happen around September-ish period. Now, if you're an individual that is in a mortgage forbearance program right now, usually a month before the program expires, your mortgage company should reach out to you with some options. Now, there are cases where your mortgage companies may not reach out to you, and you never really want to rely on banks and mortgage companies anyways. So what I would suggest is reach out to your mortgage company to explore the options and what options you have. But what they'll probably end up telling you are the following options I'm going to share with you guys today. And of course, I'll share some pitfalls and mistakes that you should absolutely avoid, because you definitely don't want to get screwed with the banks and the mortgage companies. Okay, so first thing first, if you're still struggling with the COVID-19 pandemic and you haven't really fully recovered yet economically, you can still request an extension of additional 6 months. Now, by default, you can ask for 3 months of extension, which means that in 3 months, you don't have to make any payments. But if you need it, you can request an additional 3 months of an extension, totaling up to 6 months. So if you requested for a 12-month of mortgage forbearance, you can actually request up to 6 months, which means that you have up to 18 months of mortgage forbearance program. Now, one thing for sure is that this does not happen automatically. You do need to contact your mortgage company, your bank, to get the extension filed. So if you're near the end and you need a little bit more time, definitely call your mortgage company and your bank to make sure you get the extension up to 3 months. And then if you need an additional 3 months, you can go in and ask for that as well. Now, I do need to mention that if you want the 6 months of additional extension on top of the 12-month extension that you already have, your mortgage has to be securitized by Fannie Mae or Freddie Mac, which is about 70% of all mortgages out there. So chances are you probably have a mortgage that's backed by Freddie Mac and Fannie Mae. If you don't know, contact your mortgage company and ask them, hey, is my loan backed by Freddie Mac or Fannie Mae? And asking that question should give you the answer you need. So that will be the majority of 70% of you guys that would qualify for up to 6 months of additional extension. But what about the remaining 30% of you guys that don't qualify? Well, these are the individuals that have jumbo loans. These are large, big loans, non-conforming loans, and generally loans that are not backed or regulated by the federal government. So unfortunately, the 30% of you guys that might be watching this may not qualify for the additional 6 months of an extension. Now, back to the majority of you guys, the 70% of the loans that are backed by Fannie Mae and Freddie Mac. Here are some of the options that you have, and this is probably what your mortgage companies will offer, and I'll explain exactly what these options are. Now, the number one option that they'll give you is called reinstatement. Now, what this basically is that if you, let's say, missed out on 6 or 12 months of payment, and if you have the ability to come up with those payments and pay in full in lump sum, well, great. The banks are going to say, okay, great, that's awesome. We're going to basically put you back where you were at, pretty much moving forward as if the forbearance never really actually happened. So that's the number one option. And of course, the majority of you guys may not necessarily qualify for this because obviously, it would require a lot of money to reinstate and pay back all your lump sum payments. Now, option number 2 is the repayment plan. Now, again, this only applies to mortgages that are backed by Fannie Mae and Freddie Mac, which is about 70% of you guys out there. So if you do decide to take the repayment plan, this is what it looks like. Let's say you are missing $4,800 worth of payments. So that's basically due to the fact that you were in a forbearance and it's COVID-19 and you had financial hardships. So let's say you're $4,800 behind on your monthly payments. So the repayment plan, what they'll do is they'll let you continue making your normal payments after exiting out of the forbearance, but the missing $4,800, what they'll do is they'll divvy it up, a span of 12 months or 24 months, and they'll allow you to basically pay a smaller bits on that missing payment. So basically what they'll do is they'll increase your monthly payment just a little bit so that you can catch up to whatever missing payments you had. In this example, $4,800. Now, the next option is probably the most talked about option, and a lot of YouTubers like to cover this because this is, really the favorable option out there, but it is simply called the deferral, which means that any payments that you didn't make during the forbearance program basically needs to be paid when you sell the house, refinance, or completely pay off your mortgage. So that's the deferral program. But here is the catch. Not everyone will qualify, and there's no guarantee that mortgage companies may even offer this to you if they believe that they can simply put you on a repayment plan, or if they look at your bank statement or your income and say, you're making good money. I don't know why you need to have it deferred. So we'll require an immediate lump sum payment, and that's the only option you may have. And that's what the mortgage companies might say. Or they may say, hey, based on your income and your expenses, we could probably get you squeezing out extra $200-300 on your monthly payment. Let's get you catch up. Right? That's what they may offer you. So there's no guarantee that the mortgage companies may offer a deferral plan where you simply don't have to make any payments until you sell, refinance, or pay off your mortgage. So don't count on this. And unfortunately, a lot of people did go into mortgage forbearance thinking, oh, if that's the plan, if that's how everyone's going to exit, well, let's all take a mortgage forbearance. And I won't name anyone who suggested that, but I'm here to tell you guys that this is not a guaranteed option, and mortgage companies may not even offer it if they deemed that you make a lot of money, or they believe that you're in a healthy place where you can make an additional payment to catch up, aka the repayment plan. Now, last but not least, when it comes to loans that are backed by Fannie Mae or Freddie Mac, again, which is 70% of you guys out there, they may offer a loan modification, which means that they'll extend out the loan terms and may even change the interest rate depending on what situation you're in. Now, last week I talked about how the CFPB, Consumer Financial Protection Bureau, made a suggestion to allow a loan modification up to 40-year amortization. And of course, I'm not a big fan of that, mainly because due to the amount of interest that you'll pay within that 40 years. But that may be the option that your mortgage company may offer as per suggested by the Consumer Financial Protection Bureau. So that might be the other option. If you simply can't make the payments, let's say you lost your job or you have a permanent decrease of income, that might be the option that they offer you to be able to continue making payments on your mortgage. Okay, so we're gonna go and change the gear a little bit, and we're gonna talk about how this applies to FHA loans. But before we do, be sure to subscribe, like the video, and share this video with anyone that's in a mortgage forbearance program. We definitely wanna help those individuals out, letting them know what options they have available. All right, so with FHA loans, there are several options, but the more popular option that is being available to FHA borrower is something called a standalone partial claim. Now, the way that this works is any past due amount is basically set aside and pretty much treated as its own mortgage. So let's say you have $200,000 FHA loan balance right now, and let's say $5,000 of that is unpaid because of the mortgage forbearance program. So what mortgage companies may do is take that $5,000 and treat it as almost like a second mortgage, but it's interest-free and you don't have to make any payments. So essentially, it's kind of like a deferral where you don't have to make a payment on it until you refinance, you sell, or you completely pay off your mortgage. But that is an option that mortgage companies are offering to individuals that have an FHA loan. Now, of course, if you're in a dire situation where you can't even continue making the payments, then the mortgage companies may also offer a loan modification, just like what I suggested with loans that are backed by Fannie Mae and Freddie Mac, where they may extend it out to 40-year amortization, decreasing the monthly payment, or even decreasing the interest rate temporarily. So that's another option that your mortgage companies may offer you if you're struggling still with the COVID-19 pandemic. Now, last but not least, changing another gear here again, we're gonna talk about VA loans, right? For those who have a VA loan, well, first of all, thank you for your service. I suggest that you were in the military. But with the VA loan, it's rather shocking, and I was rather disturbed by what they're offering in terms of VA loan. Now, if you have a VA loan right now, and you're looking to exit out of forbearance, the options are not really really favorable to you economically, and it's really surprising for our veterans and service members. Traditionally, if this was an FHA loan, they would have set it aside as an interest-free balance and you don't have to make any payments. But with a VA loan, mortgage companies are not required to offer that option. So what that basically means is that sure, mortgage companies may offer you a deferral, meaning that you don't have to make that payment until the end or until you sell off your house, but they may charge you interest on that balance, which if you don't pay it, the balance will accrue and it will grow. And of course, it's not going to be a very favorable option over time. So I'm very surprised and a little shocked by the fact that they're not offering that with the VA loan. I mean, for veterans and service members, like that's kind of disturbing, isn't it? Right? For those, of course, who are veterans. So with that being said, if your mortgage company does offer a deferral option, and if you have a VA loan, just know that the deferred amount, the amount that they're setting aside, isn't necessarily interest-free. And although you don't have to make any payments on it, but over time, you're gonna have obviously more and more balance accruing, and it just becomes harder and harder to make that payment happen. So do keep that in mind. Now, just like with any other loans, they are offering the repayment program, which means that your monthly payment will go up just slightly higher for a certain period of time until any past due balance has been paid off. Of course, they're offering loan modification to extend the loan terms and possibly even change the interest rates. And also you can take the deferral option, but we talked about how that is interest accruing, even though you don't have to make any monthly payments on it. So not the best option when compared to some of the other loans that you may have. So those are some of the options that you have if you have an FHA loan, a VA loan, or any mortgages that are backed by the federal government. Be sure to talk to your mortgage company and don't always rely on them to reach out to you. And of course, if they reach out to you, be prompt and respond very quickly, because you definitely don't want to waste time and not get the options that you want. So again, those are the options, and you may want to talk to your mortgage companies. Not all options will be available to you, so be prepared for that. Just because some YouTubers said, hey, you could defer all your monthly payments and not have to pay it until you refinance, sell, or you pay off your mortgage, doesn't mean that you have that option available to you. So just keep that in mind as well. I want to give you the most factual and accurate information as far as exiting out of the mortgage forbearance program. So do keep that in mind. And once again, friends, if you feel like this video was helpful and valuable in any way, please do consider subscribing and hit the like button, and share this video with friends and families that are in a mortgage forbearance program, because there's still approximately 2.7 million homeowners that are going through a mortgage forbearance program, and we definitely do want to help them out as much as possible. So that being said, thank you for watching, and we'll see you in the next video.